And it's not because it's like, oh, the banks were inefficient. It's like, actually, those are the two forms. You have payments-based flows and units, and then you have savings-based units, and those units usually have risk, and you should hopefully be getting good risk-adjusted yield for them.
10x or 100x, and increase by an order of magnitude or more the amount of interest that we're getting on some reserves and some of our savings.
The bigger bet is basically just like all of these different types of companies in the world will try to be launching their own Genius compliant stablecoins, in this gift card fashion, let's say. Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it. Alrighty, guys, we got live. Sam from Frax, who is not making it to Buenos Aires for Dev Connect. How could he do this to us? How are you?
I feel the FOMO, guys. I already feel the FOMO, but I did the KBW and token tour, and just feel like you gotta grind on all things stable coins, DeFi, Frax. So
you got to. You had an institutional network of payment providers to ship, so that is a totally valid reason not to slide to the conference, man. Congrats on
Rob, we got to introduce the show here. It's Stabled Up episode 10, Sam. I know this was just an idea in our minds back in the day, but it has really came together. I think it's your second time on. Congrats on Fraxnet. Congrats for the growth of the show, for the growth of just the entire stablecoin ecosystem.
Thanks, guys. Yeah, I mean, I think this show is going to be the coolest stablecoin show in 2026. Let's be honest, right? Like, you guys have done a great job. Great guests. I love the Jeremy Allaire episode. Got to get other guys up here, and it's been a good few weeks at Frax as well. Obviously the market itself hasn't been great, as I'm sure everyone listening to this knows, in terms of volatile assets, in terms of DeFi and things like that. We did release Fraxnet, our neobank platform, with a ton of signups and people using it, which is fantastic. But I think the more important stuff, like right now in the near term, like that people are probably thinking about, is all the DeFi blowups, thankfully of none of which affects Frax, and kind of the blue chip DeFi stuff like Aave, us, I think like Sky, totally unaffected, right? This stream finance stuff and the kind of contagion that that has happened. So hopefully you guys are either safe and comfy in spot, or in DeFi that you trust. So yeah.
Bit of both. Yeah, I mean, it was just like, it's not super inspiring to have one of the biggest OG DeFi protocols being Balancer get exploited in year 5. It's just like, it doesn't send a great message to investors. I don't think. I think the key lesson here is that there's a difference between rehypothecation and recursive lending. Rehypothecation is a method of basically kind of like looping on a single platform with a single wallet. Recursive lending is, I'm going to give my money to Sam, count it as TVL. Sam's going to give that money back to me, count it as TVL. We're going to give it to Robbie, count that as TVL, and then Robbie's going to give it to Sam and then back to me, and then we all just have massive TVL. And so that was, I think, like the core lesson learned amongst others, as well as just like the opaqueness of doing like off-chain vaults. We can touch on that for a bit, but I think there's some more positive developments to talk about, Sam.
Yeah, definitely. I think I was looking at this and like trying to also move on, but take lessons learned from this whole situation. And I think the main thing to take away from this as like an industry, and I posted about it before, is like curators right now, which for people that don't know, that they're basically people that run vaults, and then also funny enough also analyze risk and do risk ratings. A lot of them are great, fantastic. All of them, Lomba Risk, Gauntlet, Mev, all of them, some of them had issues, some of them didn't. I think the main thing to take away for me was that we need to separate the entities that actually evaluate credit risk from the ones that actually allocate and take risk. And this is why in like TradFi, there's arm's length people doing the credit ratings, like the AAA ratings and things like that. And then the actual people that trade the mortgage-backed securities or loans, totally siloed, segregated. They have like, regulatory audits and stuff. And by the way, it doesn't mean that what is going on in TradFi is like perfect either, because we all know like literally that, when you're in TradFi, you literally decide who you pay to do the credit rating. So it's kind of weird, right? Like, oh, like how good do you think my risk is? And then maybe I'll go and give money to you to rate it versus someone else. It's still better than the current situation in DeFi, where the person that is actually in charge of like the risk analysis, posting it, and then like backing it in like governance and things like that, are the same people that, like you said, Andy, like are like moving the funds here and then there. And then imagine in TradFi, the equivalent would be like if the guy at the trading desk that is actually like about to make the 200 million, bond purchase in another tab has the credit rating like form open, and he's like, yeah, I'm gonna rate this AAA and then like submit it to like Moody's or whatever, and then I'm gonna buy it, right? That's the equivalent of what it is right now. I think we need to think about this a little bit more, and it doesn't have to get any more complicated, like slashing or extra convoluted stuff. I think it literally just has to be a little bit better separated. Like for example, for us at Frax, we have our SFrax USD earn vault, right? It's a savings yield vault. But the way that we do it is like we have literally governance processes that, and again, there's large stakeholders. People, it's not perfect. People are like, oh, there's like big stakeholders or whatever, like Convex or whatever. But the governance sets the guardrails, and then the vault only does the very, very small things that the guardrails are there. It's not that the team sets totally novel things that you could just trust us, bro, right? So I think there's got to be some kind of differentiation, but hopefully it seems like that stuff is over for now, at least I hope so.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network. Blockchain shortcuts, templates, and widgets launch without friction. For builders, by builders. Visit enso.build.
It was a little bit unsettling to see that this is still happening in 2025. I think this was a little bit reminiscent of the 2020, 2021 algo stablecoin frenzy when we had a lot of experimentation. But now, we're in the world of genius. This is why genius exists, right? I'm curious how you're seeing some of the stablecoin landscape play out a little bit more broadly. I'd also love a catch up on Fraxnet, because generally, the idea is that we bring this regulation forward. Not everyone has to comply with it, but we can kind of have the stamp of approval on a certain set of stable coins, and then these are the stable coins that have some consumer, more consumer trust in them. And so, how are you seeing stablecoin landscape play out generally? Like, what are the stablecoins that you see as kind of rising to the top and really bolstering themselves and becoming more robust as the regulation develops? And then I know Fraxnet is like linking all these things together and being kind of like the glue that holds the stablecoin industry together. So would love an understanding of how Fraxnet is helping to really strengthen and solidify all of the stablecoins that are capitalizing on Genius.
Yeah, for sure. I think the more time goes on, the more I've realized it literally isn't specifically about like Genius, like the bill, but more like what the act actually represents. Because without this stuff, I don't think the like 60-70% of the activity, like Western Union 2 weeks ago announcing they're going to do their own stable coin, other big companies. I think JPM earlier today was like, oh, the deposit token at like JPM banks that is on base, right? You can test it out and things like that. And we've talked to them a little bit even before that. So there's some cool stuff that we're thinking about as well. I think the most important thing is what it represents, right? And so everyone has a stablecoin strategy. And the breadth of different types of stablecoins will have like this kind of spectrum. I kind of call this like the spectrum of different stablecoins, from extreme money, right? Stablecoins that are like universally accepted, like Tether, obviously the most moneyness out of all, and then like USDC. Hopefully, Frax USD is what we're building towards in terms of being able to be one-to-one and widely accepted everywhere, right? And then you'll have this like long arc of kind of I guess the way to put it is like gift card stablecoins, genius coins, which like if you think about like all of these stores, if it's like Starbucks, if it's Costco, if it's online places, right? They'll have these programmable digital dollars that basically you can use to get better deals and these kind of things. But then the most important is what platforms actually allow you to go between all of them, as you earn like some of them in DeFi, which are more money like, right? But then you maybe get a some Starbucks USD or something, right? And you want to actually swap it in for different stable coins. Something like Fraxnet, which is basically like a neobank that is a professional neobank platform, so people can sign up, or entities, right? And then you can swap, go in and out to fiat on off ramps and one-to-one to all major stablecoins, right? Like Frax USD, USDC, USDT. We're gonna increase. Right now it's PYUSD, USDB from Stripe and Bridge, and going to increase the actual coverage. And so you can think of it like a clearinghouse, right? Like a clearinghouse for major stablecoins. It's non-custodial. You can attach any wallet, right? Or custodial if you need one, like BitGo wallet, Fireblocks, which recently fully integrated Frax USD custody, and all these other Fraxnet hooks and stuff like that. So that's what we're building. We're building kind of the central clearinghouse, and then in the middle is obviously like Frax USD, but you don't have to use it. You could use whatever other stablecoins you want, right? And I think that's where things are going. I think that when there's going to be 1,000 stablecoins, I know that the contrary view, right, is like stablecoins are like going to be L2s, where people were like, every company is going to have an L2. I think that was probably a little too much, right? But companies have gift cards, companies have websites, right? Like they might not need like a literal blockchain themselves, but I think it's not the same thing. I think you'll see a lot more stable coins that will be successful, that'll have like narrow scope distribution, and they'll be money makers. They'll be able to actually capture both the underlying yields and then also the revenues from like payments, everything, by getting it integrated in payments processors. So we'll see. I'm really excited for basically seeing how those type of stable coins will interact with on-chain DeFi, and where we can bring value, because that's where Frax actually lives, right at the intersection of on-chain DeFi and now off-chain institutional payment flows, on-off ramp flows.
Yeah, man. I mean, Rob, that was one big trend of SmartCon, right? Where it's like, okay, we've got these RWAs on chain now, but like, then what? And I know Plume's doing a decent job of having like this kind of RWA ecosystem. There's obviously stablecoin yields across dozens of chains now, but it does feel like the next step here is like actually bringing on these, whether it's a Genius compliant stablecoin or some T-bill based yield products or other products, and like integrating them into DeFi. Sam, I'm curious if your vision still persists, because once you said this to us, I think it was on the first episode of this show, with regards to the two types. I've been using that nonstop, and everyone loves it, and they totally vibe with it. They agree with it. They understand it. Is that still very much your vision for like the two types of stablecoins? You got the Genius compliant ones and kind of like the yield bearing ones, and I know it's a bit more nuanced than that, but just kind of tap it into it.
Yeah, I think that's proven. To be even more specific, what I mean by it is like a payment type of stable coin, and then like the savings or the yield bearing stable coins. And internally in the payments ones, right? The most important thing with a payment stable coin is how many places universally accepted as money, right? And the more safe it is, the closer to risk free it is, the more likely this will be a payment stablecoin, right? Like what a payment asset is that every N person or entity that accepts it, it becomes more valuable for the next N+1, right? So like it's very difficult to get the first place to accept your thing as a payment, right? The second person, slightly easier, but still very hard because it's only 2, right? And then the third, slightly easier, 4th, 5th, 6th, right? And then the whole point is the more widely accepted it is as payment, the more likely the next marginal person or N+1 will accept it. Well, if you think about it for a second, what is the most important properties of a stablecoin to maximize that function, N+1 acceptance over time? It cannot be super complicated underlying so that every single N person, institution, entity has to analyze, oh, if I accept this thing, is it going to implode or whatever? They just want $1. They don't even want yield for payments, right? Like if you just think about this kind of type 1 kind of payment asset, it just has to be very simple, right? And that is, Genius compatible, or maybe something that's very mature like Tether doesn't even need to be that because it's so money-like. It's just out in a league of its own, right? And it's simple. Everyone can understand it. It's useful as a form of payment and general money. Then when you have it, right, the second type is, okay, when I hold it, or anyone holds a stable coin, how can I get yield from it? What's the savings account kind of structure? What is kind of this system? And I think one thing that was interesting, I think it was Paul Frambot, that the founder of Morpho, that talked about how everything is volts, right? Volts is the next thing. And I think whether we call it yield-bearing stablecoins or volt stablecoins or whatever, I think is a good way to think about it, because then the payment stablecoins are put into these savings volts, these yield-bearing, 4626 volts, whatever you want to call them, and those have risk, obviously, right? Those clearly, some of them have terrible risk, unfortunately, like the USDX stuff, right? Some of them are super blue chip, like Sky SUSDS, like Frax SFraxUSD, or Athena SUSD, and they can support large TVL. They've never had an issue. There's never been an exploit. They're very, very transparent about where the money actually is going. And if you think about it, those aren't actually good payments, to believe it or not, right? Because you do not go to people and be like, do you accept like SFRX-USD or SUSDE, which is $1.17 today or something like that. They just want to accept $1, right? So these two types of class of stablecoins, I think, will become solidified. Like these are the two types. There's no other types. The other types that we used to talk about, CDPs, underlying algorithmic or whatever, they're basically subcategories of the vault savings, because that's how you actually get the yield for taking risk, right?
Yeah.
I like it.
Yeah, Andy, did you have a follow-up?
No, I mean, very, very well put. And just generally, like when that idea has been brought to anyone from a suit to a dev, they all kind of jive with it and understand it. So I think it's like a really good, it just makes sense. It's like, guys, we've been trying to like kind of fit a square into a circle hole. It's like, no, why don't we just have very safe stable coins with no yield, no risk? And then, have ones that obviously, if there is yield, there's going to be risk. It's like finance 101, but took us a couple of years to figure it out.
It's interesting because before, I used to even think that checking and savings accounts were like an artifact of like traditional finance, because things were like super inefficient and stuff like that. But now I think, and this will be more obvious to other people too, is like checking and savings accounts are actually like a fundamental, like Platonic form of finance. Like it's like an equation of like, F equals MA, or like you discover this form that, and it's not because it's like, the banks were inefficient. It's like, actually, those are the two forms. You have payments based flows and units, and then you have savings based units, and those units usually have risk, and you should hopefully be getting good risk adjusted yield for them. And so it's not that like checking and savings are like this thing of banks and like they had shitty tech or something like that. It is actually an economic form.
Yeah. And it also goes to show that there's a really nice segue from stablecoins into RWAs, because as you start to think more about what these yield-bearing stablecoins look like, they start to look more and more like some sort of tokenized T-bill, treasury, RWA structured product type of thing that people can store their wealth in, and there's deep liquidity, and it can effectively serve as a savings account, but not a savings account that gives you 0.002% interest like a savings account in a fiat-based bank. It's giving you the risk-free rate that everyone knows, once you kind of have some sort of awareness of the treasury bill bond market that's out there. And so we can actually 10x or 100x and increase by an order of magnitude or more the amount of interest that we're getting on some reserves and some of our savings. Sam, do you think about this ever? Like, to me, whenever we're increasing something by orders of magnitude, that could pose some pretty substantial ripple effects throughout, the economy or society. Do you think that's like kind of flying under the radar, as we kind of move our cash savings account into a tokenized version of an RWA structured product, and we go from, 0.4% to 4%? Do you think that's going to have any sort of knock-on effects?
Yeah, I think first of all, anytime that there's like more efficiency, it's always better, even if I honestly can't think of an example. Let me know if you do, where there was a lot of efficiency in a market, right, which was legal, right? Like, there's obviously, you don't want crazy markets for like drugs, assassinations, etc., but a legal market where there's efficiency gains, where it's actually been bad, right? And so the important thing is, even like the community banks and stuff that are like, oh no, if this happens, like, we won't be able to lend to whatever, these efficiency gains are not good efficiency gains, essentially, is what they're saying. I think it's total bull, especially because I don't know if you guys saw the new I think it was the Fed report, I forget which regional Fed it was, where it said that stablecoins actually have a good chance of lowering credit costs, like interest on loans. And it's like, oh wow, look, now it's the exact opposite. The data and the assumptions is it's actually going to make creating credit easier rather than harder, contrary to what the anti crypto bank lobby actually says, right? And so I think we're going to see more and more people actually understand that it's a good thing in every way, even if like there's some like not great arguments of like, oh, deposit flight or whatever. The funny thing with the deposit flight argument, by the way, is that if you read the Genius Act, one of the actual bill, like the collateral types that are accepted is bank deposits at FDIC insured banks. So like, you can literally create a Genius compatible stablecoin with, for example, the tokenized JPMorgan deposits today that they announced. Like, that is literally a compliant stablecoin if you want to go in that direction. It obviously looks slightly different than like the tokenized T-bills that like we work with at Frax USD with like Biddle, Superstate, Wisdom Tree, and them, but it's still compliant. It's the same. And I think it's just going to create a lot more efficiency. And what's interesting, and then you brought this up of like, what stuff are we thinking about? The design space for like transparent Genius stables is not very big, right? There's these 5 like assets, right, that you can use, and then the 5th clause is like tokenized representations of the above 4, right?
Mm-hmm.
That's literally the definition in the bill. And it's actually, I think what's unique is that if you can get the most utility and efficiency out of this narrow design space. So what we do with Frax USD is we have all of the collateral tokenized on-chain as RWA securities, right? So we really make use of that 5th oft forgotten clause of like tokenized representations of like the above securities and assets, right? And so we allow redemptions atomically on-chain, and we allow people to actually mint and redeem if they can move the RWA token. In a certain sense, we even allow people to redeem for USDC and other tokens in line if there's a market maker that can touch the RWA and then put USDC into the redemption contract, and then the ARB bot or whatever is on chain, the MEV bot can only touch like USDC or USDT. And so we actually have the most efficient, compliant design architecture of, at least that I've seen, of a Genius compatible stablecoin with Frax USD. And as it gets bigger, it'll be this like center of liquidity with all the other, it'll basically be the pair, so to speak, right, of all of the compliant RWA securities that you can back it with, especially the ones that we have partnerships with. And so that'll make it even more and more enticing for other entities like JPMorgan or the next one or whatever to participate and use Frax USD, get us to integrate it into our system. And so it's a really interesting, quiet thing that we're doing, that we're seeing more and more volume, more usage, more growth. The supply with Frax USD in the past 30 days has actually gone up by like almost 40%. And it's been good. Things are growing and up and to the right, regardless of the market turmoil.
Asset management redefined, built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management.
Hibachi.
Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire. Yeah, it's bullish, guys. Quick news that just hit the wire. Dubai court freezes $456 million linked to Justin Sun's bailout of TrueUSD issuer Tecteryx. Just another example, right? I don't really remember what happened to TrueUSD.
I don't either. All I know is some kind of stuff, like it was during when
somehow,
they launched USDD or something. Do you remember that one?
Yeah, but like just another example of basically saying what you're saying right here about FRXUSD, about the moneyness of these assets, about the genius compliant nature of these assets, and just kind of, I mean, to me, it seems like Fraxnet is pretty much all in on this genius compliant nature of future, stablecoins. Like it seems like that's the bet that you're taking, and then the bigger bet is basically just like all of these different types of companies in the world will try to be launching their own genius compliant stablecoins, in this gift card fashion, let's say. And that Fraxnet wants to be kind of like the glue there. And yeah, I mean, look, like the supply is going up. It's great. The market's going down. That's fine. But it seems like you're playing a way bigger game than what is the price of Bitcoin today?
Yeah, we try not to look at it, although obviously we're crypto guys. It's hard,
Yeah.
But the important thing I think over the long term is, look, we're not building for next year or the year after. It's like a 3 to 5 year time horizon to see if we're correct about exactly as you're saying. We can also do even more interesting stuff as the Fraxnet platform matures, right? So one of the things we're looking at is white label issuance using the Fraxnet infrastructure and actually having relationships with these companies that might be fine with using Frax USD or USDT or USDC, but then they also want, like I said, their own kind of branded or gift card programmable digital dollar, right? Because there's no reason why if we've built all this architecture and infrastructure and neobank system for Frax USD, it can't be used for a close partner that we want one-to-oneness with anyway, right? And you can kind of think about it like, if you work with us or if you want us to issue your own Genius compliant stablecoin, you don't have to actually recreate the wheel. You don't have to recreate the on-off ramp. You don't have to recreate the virtual accounts, on-chain, mint and burns, all of these things. You get all of that for free rather than having to do each of those individual things. And so there's a very wide set of like tentacles that the whole Fraxnet like platform can slowly move into. And like you said, we're looking at where things are going, not just this week, but like next year, basically.
Yeah. Sam, what sectors, or like, is there a sector specific mindset you have with regards to the types of companies that will be, eager to launch a stablecoin and wanting to have them be certainly Genius compliant, thus a good customer for Frax?
I mean, I think the most important thing, if you're going to like work with us over other good providers, of course, like we know a lot of them, is that hopefully you do want on-chain utility, this ability to mint and burn quickly between a few chains, which we have the most coverage out of all of the issuance platforms or companies. You do want to actually have on-chain integrations as well as the off-chain banking and institutional like flows and backing it with like BlackRock Biddle or Superstate and other RWAs or cash. If it's just, I guess that this doesn't really apply because I'm not sure who would be listening super natively to crypto. But if there's no use on chain for the stablecoin, it's only for like remittance and things like that. I guess it's like slightly less of a good fit. But even like fintechs that would like to have on-chain utility either now or eventually for their issued stablecoin, I think Frax is unmatched in that area in terms of on-chain integrations, on-chain utility, and then connecting that now to off-chain.
Incredible. Makes sense. Man, I think, what we saw, we were at SmartCon last week, we were in New York, and, there was Fidelity, BlackRock, there was DTCC, there was, people say trillions, there was literally quadrillions of settlement volume in the room. And it just, it's inspiring, but it's also signaling that this is kind of where the men separate from the boys. And I tend to think that we're going to see this repricing in the market where coming up in 2026, we're going to get this institutional cycle. And, if you have an institutional strategy, this is where you're going to sort of ascend into the next leg of where this industry is going. And if you don't, you're just going to get left behind. So I guess, Sam, maybe you could just describe what it's been like, thinking back to 2021 and 2020 when you were around. Not everyone, that's around today was around back then, but you saw the evolution of the space. You saw point A to point B and the before and after. Could you just, like, when you're in the conversations, when you're in the rooms, when you're having these conversations, what does the before and after look like, and how stark of a difference is it? And where do you think we go from here when we kind of close out Q4 and we go into Q1?
Yeah, it's been a crazy past like 5 years, and obviously before that, I was in crypto for a while before the DeFi cycle too. I really do think that all of this stuff, like you're saying, the trillions and settlement volume, the big boys and stuff, is because the Genius Act opened. It doesn't mean they're all like going to issue Genius compliant stablecoins, but it really is what the act represents, the regulatory clarity for digital dollars. And this part is just like a rumor, but I've heard it from some people that I like kind of trust. And one of the things they told me is like during all of these tariff like negotiations and backroom things and stuff like that, one of the things the administration, particularly Secretary Bessent, has like said is like you have to open your country to dollar stablecoins. It's as important for the U.S. to do that as like opening your banking system and things like that. Again, I don't actually know that firsthand, but it's from people that I trust. And if that's true, that is really, really awesome, because first of all, that is such a long-term strategic view of the US dollar and what stablecoins mean to the US dollar in terms of having a ton of new treasury demand, right? And people using it across different countries. It's actually very, very impressive to see forward-thinking administration like this one actually potentially bring it up in high stakes negotiations. So seeing that, and then from, like you said, from 5 years ago where people were like, building things named sushi, hamburger, pickle, and all this stuff is pretty crazy, right? And so I think it's far beyond just one act, right? Like this bill and things like that. It's more about how big can we get, how quickly can we get there, and making sure that you're at the frontier to be able to provide this efficiency, these services to people that, like you said, they're the big boys, right? They settle trillions, and they're finally here, right?
I mean, Rob and I have been kind of like pontificating, and like, if you don't have a seat at the table right now, there's still some seats open in the market in general, but like the seats are getting sat and the table is getting set with regards to the players that are going to lead the next cycle. And so it's like, no pressure, Sam, but like same to us, where it's like, well, you guys, you have to capture some portion of the market, right? Because like we're in this adoption phase where this only happens once. Now it's massive and it's huge and it's vast and it's, as Rob says, quadrillions. But like this time period, it will last, however many number of years, and there will be winners, and then there will be the rest. And so it does feel like a bit of urgency in the air right now with regards to the institutional adoption phase.
Oh, we definitely feel the urgency. In fact, there's so much stuff to capture that it honestly, you obviously have to concentrate on certain things, and there's too much stuff. But the most important thing to think about, I was thinking like, certain type of like tokens or protocols. For example, Aave came to mind, and Pendle came to mind. Most people probably don't remember, but Aave was originally like Ethlend, right?
Yep.
And so they did some cool products, and then they were like, okay, let's restructure, change the brand, like redo some tokenomics, and then push it out. And then Aave now is, you know, like the rest is history, right? Like up and to the right, and you know, just use Aave, right? When you're doing lending or borrowing, right? And same thing with like Pendle. If you look at the Pendle like chart of the token or something, and this is not obviously investment advice, but if you look at just overall like the life cycle, right? There was this like quiet period before they, you know, hit Eureka, right? And the period is when you're designing, you know what you're doing, and you feel like the thing that you're in is the right place, right time, and a huge market opportunity. And I think then again with Pendle, rest is history, right? Up and to the right, and like a perfect product market fit that brings so much value to tons of people. And I think the comparison I give, again, not investment advice at Aave token, Pendle, Frax tokens, or anything, but with the Frax token protocol, this stuff, I really actually feel like between 2020, like you were saying, Robbie, and then like 2025 is between our Ethlend phase and then our Aave phase. And so like the things we've learned, and the adjustments that we've done, and then the things that we know are coming, and obviously change in tokenomics and things like that, we can, you know, that's a whole separate episode. Obviously, like recently Uniswap also announced this huge thing where, you know, Uni token's been quiet for a while, and people are like, you know, what does it even do? And then they came out, right, and we're like, okay, I actually really love that unification token proposal, right? I don't know if you guys have talked about that at length yet, but I think these things where there's this period of quiet, recalibration, readjustment, and then huge value creation, there's going to be a few of these, like you said, Robbie. And I think we've seen evidence before of other cycles, like Aave and Pendle. What's going to be the ones in next cycle? And obviously I'm biased, and I think it's Frax, but that's not going to be the only one. I think there's a few other really interesting ones, and I think that's the real question, right? What's the next like 20, 30x that is right at the right place at the right time, that is creating value and knows what's going to happen in 2026 and 2027.
100%.
Very well said.
That's very bullish for Frax, by the way. Extremely bullish.
We'll see. I think so too. We'll see soon.
Yeah. Sam, thanks for your time, man. We are very slammed into DevConnect. We are stoked to get out there. Again, bummed that you're not going to be there. Sure, we'll see you at a conference towards the end of the year or early next. But yeah, it's crunch time. It's Q4. It's crunch time. So we appreciate your hard work. Congrats on Fraxnet. Congrats on the success. Let's just say that there's some stablecoins right now that are the stablecoin rankings are being flipped, and you know, if you know, you know. So we'll see you on the other side, Sam.
Thanks, guys. Enjoy DevConnect, and talk to you soon.
Cheers, man.
Thank you, man. We'll see you soon.